Hi there, I'm Champion Trader Kevin Davey, and today I want to do a follow-up to the video I did last week on what I'm trading with my algo trading strategies. So let's take a look. Before we get started, if you haven't signed up for my free algo strategy, now's the time to do so. Hit the QR code or enter the link you see at the bottom, or in the description you'll find a link. Sign up, you'll get this free algo and lots of other great information. So today I'm doing a follow-up because of some questions that came in that I wanted to address and give you a little more information. So I received this email with these questions about the strategies I showed in the last video. The first question was, do all the strategies you show pass your strategy factory criteria now, as of today? Or did they when you first developed the strategies? And kind of in between those two questions is deterioration of strategies normal? So I'm going to address all three of those questions and hopefully enlighten you a little bit on back testing and real-time testing, because there definitely is a difference. So just to give you some background, here's your typical strategy. You run a back test, you get the light blue curve. It's going up and to the right. When you look at net profit versus time, this is kind of what you want. And what most people assume is that kind of performance is going to continue in the future. And it's going to kind of look like the green line, where basically you have the same slope as the back test and you keep getting profits at the same rate. What most people don't tell you, though, is that usually that's not the case. It does happen, but when you look at enough strategies, there's usually on average a degradation. So what you get in live trading might look something like this, where it could still make money, but not quite at the same rate, meaning the slope has changed, and maybe there are bigger drawdowns. And you can see, just as an example there's a big drawdown there that you didn't see during the back test. So there's two types of degradation that could happen. The profits could be less and the drawdowns could be more. So that's important to realize when you go from back test to real-time trading. Most back tests are going to degrade in real time. Not all of them, but a lot of them will. And like I said, what that means is profits are going to be less than expected, and the drawdowns are going to be worse, either in magnitude or in duration, maybe both. And when you take those things into account, if you do your strategy selection, your portfolio building, your position sizing, those type of things, if you do it only on the back test, you're going to be in a lot of trouble eventually. Let's take portfolio selection, for example, or portfolio building, I should say. Take a bunch of back tests, add them together to create a portfolio, and the performance looks awesome. But that almost never turns out to be that good in real time. And it's because there's degradation in the back tests that then show up in real time. And so your portfolio won't be as good as you think. Position sizing the same way. If you use something like Optimal F or Kelly criteria, what it shows in the back test will be a lot better than what it shows in real time. So you got to watch out for that. Of course, if you have proper strategy development, you can account for a lot of that. So you can make sure you know it up front, and then you can build your strategy and take all the steps you need to keep that in mind, that there is this degradation. So is it a bad thing that most backtests degrade? Well, you could say yeah, because you're not getting what the backtest is, but I look at it a different way, because once you start getting real-time performance, that is what's really important. So at that point, the backtest doesn't matter as much. The real-time performance matters. And yes, there's going to be degradation, but you have the real-time performance now to look at. And so that becomes a good thing. So it's kind of a little weird here that, hey, my real performance isn't as good as the backtest, but that's a good thing because now I have real performance. And the way I look at it is the real-time performance is much, three muches, much more valuable than backtest. You know, it's nice to see a backtest curve, but I'd rather see a real-time performance curve. That means a whole lot more. And obviously, it's a real-time performance curve. The only way you can truly get it is by running the strategy in real time. And obviously, most people don't want to do that. But when you trade live, that's what you're doing. You're getting real-time performance. So the correct approach then to building strategies means you have to factor in and account for what I call the optimism of backtesting. Okay? And if you go in with that and realize that you are looking at an optimistic scenario, you could still have a good strategy at the end. You just have to realize the performance will probably change once you go live. And knowing that, you can do position sizing and portfolios and all that stuff. You can do that up front, knowing what's going to happen in real time. And that makes your expectations about what will happen in real time a whole lot more realistic. And that ends up being a really good thing. So, to answer the questions that were put forth in this email, do the strategies that I show, which I'll show in a little bit here, do they pass the criteria for making strategies? Do they pass it as of today? No. But they did pass it when I developed the strategies, which might have been a number of years ago. So there might be deterioration. And that's normal. Doesn't always happen, but when it does, you know why it's happening. It's to be expected. And you know the saying, past performance is not indicative of future results. The way to remember this is past performance is the back test. And that's not indicative of the future, which is real-time results. So back test and real-time are going to be different. And they're going to show different things. Okay, so let's look at some examples of this just so you understand this. This was a curve I showed, one of the 5 curves that I showed in the previous video. That's what the backtest and real-time test looks. So you might say, well, where does the real-time start? Can't tell from this chart. I had to go and look through the initial records for this. And it turns out the live performance started right at the beginning of that blue area. So my backtest was about the first 148 trades or so. And if you draw a straight line between the start and end points, you get that kind of slope. And then when you go live, you can actually see right now so far, a shorter period of time, of course, but the slope is actually going up. So this strategy has actually improved live compared to backtest. That doesn't always happen, but it did in this case. So let's take a look at another strategy, crude oil strategy. Now this one has a much longer real-time performance. And you can see that with the blue area. It has almost 11 years or so of real-time performance since I developed it. So I developed this strategy back in, I think it was around 2014. So again, if you draw a line connecting the start and end points, you get that slope. And then you get, it's a slightly degraded slope, but looks pretty much the same. But the great thing about this is, yeah, it degraded a little bit, but look at all that blue area. That's real-time performance. It's hard to argue with real-time performance. You can argue with backtests because they could be overfit, over-optimized, but real-time performance is where the real key is. So this one's had a great run of real-time performance, even though it's a little degraded from the backtest. So let's take a look at a third strategy. This is the gold strategy. And you can probably guess that that long drawdown around trade 400 is probably real-time. And if you thought that, you'd be right, because there's the real-time performance. Still a couple hundred trades or so in it, but if you look at the slope before of the backtest, you'll see it actually gets better. It's another case that gets better profit-wise, but does it really get better? I don't know. I don't really like that drawdown. The thing that made this performance good was the last 50 trades or so, where it just kind of rocketed up. So even though technically profit-wise this improved, overall I'd say this is degraded because of that long drawdown, that long protracted drawdown that was also pretty deep. Next strategy was the US strategy, and this one doesn't have that long of a live performance period, but when you look at it, you can see it does degrade during that live performance. So that's kind of more of what I expect out of strategies, where the slope gets a little shallower. It still makes money, but not nearly as well as it did during backtest. So that's kind of more the norm. And then the final strategy is kind of an oddball. It's the mini NASDAQ. It did not look good during the backtest relative to what it did after. It still passed during the backtest, but afterwards the scale is blown up so much that you really can't even compare before and after. You know, the slope before looks okay, but the slope after looks so much better. This is an oddball. Usually strategies do not get this much better, but this one, when I developed it, was I think late 2019. So when COVID hit in early 2020, right shortly thereafter, this strategy really took off and has been performing well for about 5 years. And so that's what you see in the live performance. So that one's kind of an oddball. But when we look at them all together, the 5 strategies, 2 had performance degradation, just looking at P&L. 1 had a small performance improvement. It was probably pretty much the same between real time and the backtest. 1 had a medium improvement, so the profit did go up, but it had that big drawdown, so you know, it's sort of half improved, half degraded. And then the final strategy, that mini NASDAQ or the micro NASDAQ, that had a large performance improvement. That was kind of unique. But the point here is just on those strategies, hey, if you were to plan for degradation, you'd probably be in good shape. And of course, if it doesn't happen real time, well, then you're doing even better. But if you plan up front to say, hey, my back tests aren't going to quite look the same, I'm going to plan on some degradation, you'd probably be in good shape. You might say, well, what degradation? How much should I use? Well, I looked at hundreds of strategies, and I share with my students the exact ratio that I use that's based on real strategies. So it's actually a good number to use for degradation that, on average, when you have enough strategies, you can expect. So, hey, what did you think about this video? What did you think about my explanation? Does this happen to you? Do you see degradation in your strategies? Maybe you do, maybe you don't. Either way, leave a comment. Let me know what you see in your strategies. And of course, if you like this video, give it a thumbs up. I'll keep making more like this. I'm Champion Trader Kevin Davey. Have a great day. Well, if you'd like more information on algo trading, hit the QR code. It'll take you to Amazon, where you can look at my 5 trading books.